This is Jyoti. I'm yet again in front of you with another topic called credit worthiness. Before I start off with my very interesting topic, I would like to tell you one instance that happened with me this morning. I received a call, and as soon as I picked up, on the other side was somebody offering me a home loan. To my surprise, I was taken aback. How does he or she know that I am worthy of a home loan worth 30 lakhs? Where did the information come from? And why are they offering me this kind of money? I was surprised, taken back. And I thought, what is it that takes it to offer a loan to a stranger like me? Friends, this is what is called credit worthiness. They found me worthy of taking a loan from them, money from them of this amount, of this magnitude, without even asking any detail from me. So, where did they gather this information from? Obviously, they gathered it from the market. They gathered it from the people they know. They gathered it from the various financial agencies which I had been dealing with. So, credit worthiness, by now you would have understood, means the term signifies it's about a person or an entity or a business's worthiness to borrow money from the market or any financial institution or an individual. In the creditors, so let's before we start, let's discuss what credit is, who's the creditor, and how do we get the money. So in this case, the credit is being given to a borrower, somebody who's ready to take that money, and there is a lender involved. The lender could be an individual, lender could be a financial institution, for example, a bank. A lender could be anyone. But before anyone gives you that kind of money or whatever offering he or she has, would definitely like to check on certain points. So there are five things that we normally check upon before we give money to a borrower. Even if I had to lend a 50 rupee to my friend, I would like to check or have some fair idea about his paying back capacity, whether the other person has the intention to ever pay me back, whether does would he have that kind of money in the near future. So there are few things that we again go back and check. There are five C's to credit worthiness. These five C's are called the character, the capacity, the capital, the condition, and the collaterals. So we'll go one by one discussing what these fives are. First is the character. If I say what character is, your answer would be my reputation, isn't it? My reputation in the market defines whether have I paid all my borrowings. If ever I had borrowed in my life from anyone, did I pay it in time? Did I pay it in installments? Did I bother the other person, the lender, so much that I gave it back not in the specified time? So, character is the most straightforward characteristic which will be taken into account, which will measure my ability to repay. The level of cash flow, the measure of my ability, and my debt obligations. If I have loads of debts, if I have borrowed from various other sources, I may not have the intention to pay it in time. Character, the first C that we have covered. Second is the capacity, which is of the foremost importance. Capacity, whether have I borrowed that, after borrowing that money, do I have the capacity to pay it back in the near future? How do we calculate capacity? By saying that, we go back checking into what all I have, what assets I have, and what are my liabilities. So the assets minus the liabilities define my net worth. Whether I am a person of some worth, which we're talking about the worthiness part, that whether would I be able to pay my money back in the near future. So coming back to the point, there are factors which determine the credit worthiness of a business. When we talk about business, then we say what is the size of the firm, What is the outstanding debt the company already has? Has it borrowed in the past? Did it borrow in the past? Is already in debt? Does the industry that business belong to undergoing any kind of risk? For example, in the past few days there had been fall in the Sensex, the sensitive index, and that was very specific to the automobile industry. The automobile industry underwent a huge loss due to inventory. Now, if I had to lend a business which was into automobile industry, I would not take a chance right now. Maybe in the near future, when the situation gets better, I may. But for now, I will stop my lending. So it is that industry specific. If there is a risk involved, we would not lend. Then comes the payment history of that business. Whether in the past they had been paying things in time, they're paying all their money in time, the borrowings in time, because none of the business runs in a standalone environment. We borrow, we grow, and we pay it back. It's as simple as that. Then comes the credit utilization ratio, whether the money that we have borrowed from the market, are we channelizing it to the right kind of source? Is that money going to bring in more business or would it make a loss? That is also to be checked. That intellect of that businessman or that industry needs to be checked upon, because we also it's a kind of investment that we are making into them. Although we would be deriving benefits out of it, but it is an investment which will give us interest. So we are bothered about a principal plus the interest that we would like to get in future. That gives us enough, it's entrusts us that we should always look into the where the business is flowing, where is the cash flow. Then comes the length of the credit period. The company that we are offering the loan to, or a business or an individual, we also decide how short or how long the span can be. The better your credit worthiness, the more can be the stretch of period that we offer the loan to. Otherwise, we restrict it to a lesser time period. So it is inversely proportional. The public records of, for instance, the liens, the bankruptcies, and the judgments that had been seen in the past, this is a past check that we keep on doing throughout the process, that is taken into account. The borrowing power of the business, for example, if a company A comes to me borrowing a sum of 10 lakh rupees, I will go back and see whether have they borrowed it from other sources also, whether have they disbursed a loan, they've been able to fetch loans from other sources also. That also defines their credibility. Now, how we evaluate the credit worthiness of a business entity? There are various factors to it. We calculate it on the ratio of the assets to the liabilities to know whether the organization has enough assets to cover the debts. For assets, we can say, if we talk about an individual, asset can be a home. If I have a house, possibly I can use it as a collateral, and it is an asset. I can base my loan on the assets that I show. The second is, if a borrower has pledged collaterals. I was discussing the 5 C's of credit worthiness. The first was character, as I discussed, then we were at capacity. Credit collateral is one of the C's of amongst the 5 C's of credit worthiness. So collaterals are, what are collaterals? Collaterals are papers, documents that show that you have what kind of assets that you carry. For example, if I have land, I have buildings, I have home, I have whatever assets I have are counted as collaterals. Collaterals can also be your mutual funds, investments, your except for your saving accounts, everything else falls in the category of collaterals. The lender then knows beforehand whether or not it is a specific asset which is mentioned in this balance sheet or not. So we have a look at the balance sheet. One is that we look into the ratio of the assets to the liabilities. Second is the balance sheet. Thirdly, we examine the calculation. We calculate the days in receivables as to how long has to be the loan be disbursed for, and how long will it take for us to recover it from that kind of business. So there are three factors we have already discussed to evaluate the credit worthiness of a business entity. Now we come to the purpose of evaluation. Why do we evaluate? Because see, I told you when we started our conversation that I had I got a call from one of those companies saying that they offered me a home loan. So they've already done their homework, basis various factors that they would have taken into account. So the very purpose of knowing the credit worthiness is that it makes everything smooth and possible in a very short time. If I am credit worthy, I will make prompt and timely payments every time. That would show in all of my transactions. If I keep a credit card, I have a revolving credit balance which is very low. I'll make sure that I've chosen the option of automatic payment so that there is no risk involved of forgetting to pay in time. Then I would like to pay my debts and not shift into various other accounts, fiddle with accounts. We should keep it very straight and simple, which is visible in our balance sheet, our accounts, and all financial transactions. In case I have missed on a payment, I will try to pay at least the minimum balance out of it. If in case I carry a credit card, I will manage it properly so as to give it a good credit score, because that is being evaluated by the CIBIL also. CIBIL is a credit investigation bureau which has been set up to by the government. It is an autonomous body which gives information to individuals, businesses, and the government about everyone. I have a CIBIL. I must be having a CIBIL score. Everyone of us, each one of us, who has a financial account, who carries a debit or a credit card, would definitely be having a CIBIL score, and we are under surveillance all the time. So we must not forget that we have to keep our balances, our borrowings, and our transactions very fair. So what we do here is to keep our credit score in place. We pay our credit card minimum balance, at least the minimum balance, in time. We opt for credit amount only in case of dire need. Don't borrow unless you need it, really. You can negotiate in terms of loans if you're finding it hard to make payments. But yes, we need to be true to the bank and the financial institution we are borrowing from. We have to go back, tell them, discuss our problems, get a solution instead of running away from them. So go back and discuss. In case you've borrowed it from a bank, go and discuss that we can be paying it in, maybe we need more of time. You can buy time from them. For bigger down payments, if we make bigger down payments, the risk is lesser the exposure, lesser the risk. The rule is as simple as that. We avoid multiple loans. Don't take, it is advisable not to take multiple loans at the same time, because, as I said, the exposure increases. And it is advisable not to open a large number of account at the same time. So I hope from the viewpoint as a business entity, it must be clear by now that what needs to be followed, what needs to be done, and what needs not to be done. What is the importance of credit worthiness? It is important to be aware of your credit worthiness because it determines your suitability and eligibility for acquiring the said loan. Because at times we want to expand our business, we need instant money, and there comes our credibility. So, in case we had been fair on it, we will be able to fetch anything we want. If you're considered a credit worthy prospect, it will make you eligible for better terms and conditions like a low rate of interest, maybe an extended time period which others may not be enjoying. So these two things at least you can cash upon. Credit worthiness has a direct impact on a business funding insurance premiums, employment eligibility, and professional license. By saying premiums, insurance premiums, you end up paying lesser premiums if you have good credit worthiness. If in case you're a defaulter, you end up paying a larger money in larger sum as a premium for to an insurance company. When I talk of professional licenses, there are various licenses being provided by financial institutions. There are licenses by the IRDA, which is the Insurance Regulatory Authority of India. Then the RBI also gives a lot of licenses, but it again looks back into your credit worthiness. Having discussed the importance, we come to the benefits. Once again, as an individual and as a business entity, there are quick approvals of loan. When I again reiterate quick, the morning call that I received from one of those financial institutions, they offered me quick money. If I had said okay to them, they would have disbursed a loan in a day's time. They needed no document because they know that I am worthy of 30 lakh of rupee from the market. And there is less credit risk. There are low credit rates, which I had already discussed. We would be offered lesser than what other people who have higher exposure, who were defaulters or who had not paid in time, who have a bad track record, would not get a credit rate, interest rate which I would be offered from the market. And we would also get a higher credit limit. Now, by saying higher credit limit, what do we mean? It means that if I'm eligible for a loan of 30 lakhs, maybe my counterpart who earns more, who has a better business, who has better cash flow, would be eligible for a loan worth 60 lakhs. So it's very important that we are credit worthy, we remain credit worthy throughout. This is the most interesting part of my presentation, where I would be discussing about CIBIL, which is the Central Information Bureau Limited, which provides a score to each individual and business entity. And the score ranges from 300 to 900 points. 900 is the maximum and 300 is the minimum that we need. 900 is the best score, but 700 is a decent one for an individual. For a business entity, the parameters are different and therefore the scores are different. We score it on a different scale altogether, and the score of 80 and above makes a business entity eligible for a loan. CIBIL per se follows certain parameters. How do we end up calculating the score of 700 or 300 or 400 or whatever? What are the parameters that we base upon? So the first is the payment history of the individual, which carries the maximum weightage, which is 35%. Then the amount owed. Amount owed as in the amount, principally how much amount did you borrow from the market, which carries 30% of the weightage. It makes it 65. The payment history and the amount owed make 65% of the weightage of the CIBIL score. Now we come to the length of the credit. For how long had we been borrowing? That carries 15% of the total weightage. And the new credits, what kind of there can be different kind of credits that we take from the market. There can be small petty loans, there can be a personal loan, there can be a home loan, there can be a machine loan. So there are a variety of loans that the market offers. What kind of borrowings have we made? The new borrowings make 10% of the weightage of the CIBIL score. Last but not the least, we have the type of credits that also makes 10% of the CIBIL score. That comes to 100%, and that is how we decide how are we going to rate on the CIBIL score, an individual or a business entity. With this, I hope you would have understood what prima facie, primarily the idea of credit worthiness and how it revolves around the CIBIL score and our cash flow, the assets and the liabilities involved, and how we have to at all times keep it intact and follow it, and you have to keep a track of where the money is going and whether are we paying things on money on time or not. With this, I end up my presentation for today, and I will be back with more on banking. Thank you very much.